Hello and welcome to my presentation. My name is Damaris Arce, and in this presentation, I will be talking about the subprime crisis. Specifically, I will be talking about the mortgage borrowers and what type of role they played within the crisis. I will discuss on what types of mistakes mortgage borrowers did and what they did correctly in the crisis, what types of principles were violated in managerial finance, stewardship, and biblically. I will also provide some recommendations on what mortgage borrowers should have done to reduce the severity of the crisis and how they could have diminished their role within the crisis. So what mistakes did mortgage borrowers actually commit? For this section, I want to give a step-by-step analysis of how financial borrowers affected the financial crisis. The first step being committing fraud. Throughout various articles in the course, we can see how mortgage borrowers deceived banks and lenders with the income they provided, providing artificial income that resulting in getting risky loans. Following the next step, given that they were deceiving institutions, this resulted in them obtaining risky loans such as non-prime loans and subprime loans. Just to briefly provide some perspective, these loans were given to people who either 1. Had bad credit history or 2. Had low income. Unfortunately, the majority of people who were committing fraud were low-income families who had very little knowledge of the types of loans they were given. The third point kind of ties to the second point in the aspect that how easily it was to obtain a mortgage loan. It went to the extent of these banks not even asking for a down payment or for borrowers to get what is called a piggy bank loan, which essentially is a second loan for the down payment. Due to banks and lenders having very minimal restrictions regarding credit, this resulted in low-income families who weren't able to afford these mortgages obtain homes very easily with as far as making no down payments on these homes. The issue here is that these families saw how easily accessible these loans were, which resulted in them taking out multiple loans and purchasing multiple homes that they weren't able to afford, therefore creating overly confident borrowers. Considering these factors, this led to low-income families not being able to pay off these mortgages due to the fluctuating interest rates, which unfortunately led to them defaulting on those homes or having foreclosures. In my opinion, I don't really believe that there's much that went well throughout the financial crisis, nor the role that mortgage borrowers did that positively affected the situation. However, I do believe that they did indirectly affect in some aspects the financial crisis. So the first point being stimulated the economy. So how exactly did they stimulate the economy? So given that banks and lenders had loaned out risky investment to low-income families and then sold these securities to investors, there was a strong need to keep the economy afloat, to keep essentially low unemployment, and to generally stimulate the economy to avoid risky borrowers to foreclose on their homes. That would then negatively impact investors and generally negatively impact the economy as a whole. The second point is that mortgage borrowers and others led to an economy reset that was needed and overall a revaluation on how loans would work. Although the financial crisis severely impacted many families and unfortunately many institutions as well, this reset was needed in our economy. In this slide, I want to further discuss on managerial finance principles that were violated by these mortgage borrowers. The first point being unrealistic, unreliable, and unattainable budget. As I mentioned previously in my other slides, as a result of how accessible these risky loans were, many buyers were negligent to further research of how exactly it could impact their budget in the future. They didn't realize the implications of deceiving to get a home or even multiple homes, or how costly it could be for them. Buying homes that were way out of their budget was not only unattainable to their budget, but overall unrealistic. Another violation was that buyers didn't thoroughly consider if there were more benefits than cost. Despite the advantage of owning a home, at what cost did they obtain those homes? After providing false income information, they were provided with high interest rates that were unattainable, bad loans such as interest loans only or non-prime loans, all which resulted in them losing their homes and essentially going broke at times given that many lost their jobs during the crisis. Lastly, another principle was violated was protection from loss. And no, not the ones that lenders had from these risky borrowers, but the types of protection borrowers didn't have. Staying within the realm of principles that were violated, I want to touch upon stewardship principles that were violated by these mortgage borrowers. The first point being lack of justice. Not simply the ones that institutions had violated, but the ones that mortgage borrowers had a role on as well. This is kind of difficult to think about considering that these institutions took advantage of people. However, borrowers were knowledgeable of what they were doing and their actions were far from just acts. They themselves lacked justice because they deceived, which only kept fueling the fire of the financial crisis that was happening. Another point is lack of accountability. Borrowers felt almost untouchable, as if they weren't going to be negatively affected. Their actions implied that they weren't going to be held accountable if something terrible happened. This led to them continuing what they were doing. The third point being desire of wanting more than one needs. I mentioned previously that borrowers would take out more loans than were necessary and purchase more homes than a normal family needs. Realistically, though, a family only needs one. This led to a saturation in the market that led home prices to drastically increase, leaving other people who truly needed a home in the dust, finding it unnecessarily attainable to own a home. Getting multiple For the last principle that I want to touch upon that were violated by mortgage borrowers is biblical principles. In the Bible, there is multiple verses of how the Holy Spirit aids us to control ourselves. Impulsively buying multiple homes and getting multiple loans is a lack of self-governance that many mortgage borrowers had. One of the main reasons why mortgage borrowers played a big role within the financial crisis was a result of deceiving. Deceiving that they were able to pay off these homes although they weren't entirely sure. They wanted to buy homes given that getting one years ago was not that easy, overall leading them to be a big part of the moment in the housing boom. The last point is walking in righteousness. Again, this tied to the last 2 points, but one needs to not only think about what one wants and needs, but of how it will impact those who are in need of a home but aren't able to get one, of how it's indirectly negatively impacting others due to the lies and selfishness that lies on these borrowers. Some final recommendations that I would give to mortgage borrower is one, to think about the repercussions of their actions. Although getting a loan seems easy to attain and even attractive, one truly needs to consider about how it would impact oneself since 6 months from now. It's not solely of only getting a home, but it's also considering if it's possible to pay off despite the fluctuations in interest rates. Another recommendation I would give is to not take advantage of the system. Given that banks and lenders have eased the restrictions to provide loans, that is not equivalent of taking advantage of the system and falsely providing information and buying multiple homes. As a buyer, there is an intangible requirement of making further research of how those loans will later affect your home and overall your budget. Lastly, to avoid unattainable loans. This ties to the past two recommendations, but I also want to point out that not all loans are beneficial even if they're accessible and you're aware that you do not have the sufficient funds and don't have a credit history. It is recommended to see the pros and cons of only if any loans that will be loaned out. Although mortgage borrowers weren't fully at fault of what happened throughout the financial crisis, I do believe that they did play a significant role throughout the crisis. If borrowers didn't partake in what they did and where we discussed this throughout the presentation, I truly believe that it wouldn't be what it is today. Thank you for watching, and I hope that my presentation brought some value to you. Thank you.